Founded as a spin-off from Postmates in 2021 and going public via reverse merger in April 2024, Serve Robotics NASDAQ. Serve is transforming last-mile delivery with AI-powered, zero-emission sidewalk robots. Now trading around $12, this is one AI robotics name that startups, governments, and enterprise partners are betting on. Serve designs, manufactures, and operates autonomous robots delivering food and goods for partners like Uber Eats and 7-Eleven. By early 2025, they are on track to deploy a fleet of 2,000 Gen 3 robots across key U.S. markets LA, Dallas-Fort Worth, and Miami, completing tens of thousands of deliveries to date. Its major partnerships include a multi-year agreement with Uber Eats to deploy up to 2,000 robots through 2025, active robot delivery for 7-Eleven in California, and a strategic manufacturing alliance with Magna International to mass produce its sidewalk bots. Serve also retains equity backing from Uber Postmates. Nvidia previously licensed Jetson AI chips to power Serve's edge compute, but fully exited its investment in Q4 2024, raising investor concerns. The positives: Serve has first-mover advantage in sidewalk robotics, real deployments in high-traffic cities, Fortune 500 support from Uber and Magna, and tilde 70% YoY revenue growth in Q1 2025. Their robots appeal to cities pushing for zero-emission solutions. On the downside, Nvidia's exit caused a 40% drop in share price at the time. The company posted a tilde $13 million net loss in Q1 2025 and remains heavily reliant on equity raises for expansion, which could dilute shareholders. Regulatory hurdles and operational scaling add complexity. Stock volatility has seen shares swing between $3 and $14. Still, Serve has support from city governments like Los Angeles, Miami, and Dallas, each collaborating on robot rollouts under smart city initiatives. Serve Robotics is pioneering green, AI-driven delivery infrastructure poised for scale, but navigating serious challenges. Please subscribe to Risk to Reward, not financial advice.